Hey there, welcome to another episode of Dividing Truth. This is your host, Lexi Johnson, and we are here with yet another episode. Today's episode is the truth about your bank. That's right, we're going to get all into the details, and we want you to be aware about what the bank is truly about, right? But before we do that, I want to share with you that Dividing Truth is a weekly podcast that shares financial truths dedicated to helping women professionals and women entrepreneurs to become financially free in uncertain times, right? We want you to think differently. We want you to master your money because guess what? God created us to have dominion, didn't He? And not just dominion over certain things. We're to have dominion over everything created on this earth, right? And money is one of those things that was created, okay, by man. And so, therefore, money should not be the ruler of us. We should be the ruler of it. And this show, we want to help you to do just that. We want to help you to do just that. Listen, you're also this show, Dividing Truth, is hosted by Radio Wave for you. Radio Wave for you. I'm giving out the website there, radiowaveforyou.com. But the station is Radio Wave. We want you to go to the website. We want you to subscribe so that you can not only catch Dividing Truth, but you can catch many other great radio shows and podcasts such as Plus Size with Shinar, Marriage with Benefits, Rated X, and so many more, right? Go and subscribe right now to Radio Wave by going to the website radiowaveforyou.com. And if you're listening to this podcast, when you be listening weekly, we want you to download the podcast, right? You can do that. You can listen to this podcast anywhere on pretty much any platform that you listen to podcasts on. You can also download the Radio Wave app. Okay, so just go to your Google store or your Android store or your Apple store and download Radio Wave for you, Radio Wave, and enjoy listening to the various shows each week. Now, if you want to subscribe specifically to Dividing Truth, I'm going to show you that website now. Scrolling down at the bottom, go ahead and subscribe. Now, listen, when you subscribe directly to Dividing Truth, you can kill two birds with one stone, right? You can subscribe to Dividing Truth, but you can also be subscribed to Radio Wave. So that knocks out both, right? At one time. So you may just want to do that. And now let's get into this topic of the truth about your bank. Now, I don't have a guest with me this week, so we know it happens when I don't have a guest, right? The podcast is shorter, usually closer to 30 minutes. But I want to share with you today about the bank, right? And the truth about the bank. So if you're like me, and most people are, we have been conditioned that when as we're growing up, that the safest place to save your money is the bank, right? The safest place to save your money is the bank. Well, that couldn't be any further from the truth. And I remember when I began to learn really how banks operated, how shocked I was, right? You think that these institutions are here for you, right? Some of them have their nice little commercials or their mottos and things like that about wanting to, be to help the community. They're for you. They're on your side. All this kind of stuff. But it couldn't be any further from the truth because the truth of the matter is they are in business to make money, and that's the bottom line, right? They want you to feel like you can trust them, feel like you can um, uh, your money is safe with them. They want you to have all of that, of course, because they want you to deposit your money with them, right? And some people will ask me, well, what about credit unions? Aren't they better than banks? Aren't they, a little safer? No, they're not because they're in the business of making money as well. Now, let me say this. Are there some banks and credit unions that are a little bit friendlier than others? Yes, there are. There are some who don't, charge all these magnanimous fees. There are just some that are better, right? But at the end of the day, every bank, every credit union, what do they want to do? Make money. Why? Because they've got to stay in business. Okay. So we're going to be talking throughout this podcast how they do that, right? And how they use your money to do that, and how they use your lack of knowledge to do that as well. Okay. So let's talk about it. What banks actually do is they lend out more than what is kept in their reserve, right? So banks are required to keep a little bit of money in reserve. So when you come and you deposit your money, the banks don't have to keep all of that money on hand. Okay. In fact, for every dollar that you deposit, okay, the bank can create another dollar. Now, notice I use the word create. Okay. I use the word create. For every dollar that you deposit $1 in the bank, you deposit one, the bank can create another one, and now they have $2. Okay. Now, what are they going to do with this $2 or the $1 that they created? They're going to lend it out. Okay. So this is why they want us to come and deposit with them, because the more money that we deposit, the more that they can lend out. So you may be saying, okay, they create this dollar, they lend it out. Well, what does that mean for them? How do they make money? Well, the created dollar, okay, is what they loan out. So they haven't really loaned out the true dollar, right? They loan out this created dollar, and they loan it out. Your person A, they're A, you're B, they're going to loan it out to person C, okay? So because you, person B, deposited a dollar, they can now create a dollar to lend out to person C. Okay, hope this is making sense so far. So person C takes the loan, they agree to take the loan, right? But now person C has to pay back that created dollar and interest. Okay, so the bank is making money out of thin air, out of created dollars, right? They are not lending out true money. They're lending out created money and making money off of that. Okay. Now, that isn't if that isn't bad enough, all right, if that isn't bad enough, what will happen? Let's just say everyone decided that they wanted to come and get their money out of the bank. Okay. All at once. Some major, I don't know, emergency has happened. The entire city, the entire state, the entire nation wanted to come get their money out of the bank all at once. Well, you would not be able to get your money. Okay. Because again, they have made, tons of loans. They've done all kinds of things with the money, right? They don't have it sitting there for you to take out. Remember, they only have to keep, a reserve. Okay. They don't have to keep everything that has been deposited. Even the loans that they're giving out, those are based on that created dollar. And so they don't have to keep all of that money sitting there. They can do other things with it. They can invest it. They can do all kinds of things with it, right? So if everyone wanted to come all at the same time and withdraw their money, they could not. People would not be able to do that, okay? And so for this very reason, this is why we're saying your money is not safe at the bank, okay? Your money is not safe at the bank, all right? So banks lend money. They lend created money. Okay. They lend created money. So there's two things that I just told you. One, your money's not safe. If everybody tried to withdraw all of their money all at once, they would not be able to, because all they need to keep is a reserve, right? Second, they create money. Okay. They match what you deposit. They can now loan out that created money. Okay. and charge interest on it. Now, third thing is, because notice, when you get a loan, it's not them actually giving you all the cash, right? If you go get a loan for a home, $130,000 home, they don't actually give you any cash, right? They just give you this paper that says you've been approved, right, for this loan, okay, that you can go and then use that money to purchase a home or whatever the terms of the loan is, right? You never walk out of there with all of that cash, okay? All right. So, number three, oftentimes people think that banks are good to help with development, right, and developing countries, but it's the same thing as the bank, lending to you or I personally. Okay, so when they lend to a developing country, right, the developing country needs it because that developing country is poor. It doesn't have, it's not doesn't have its own funds. It's not generating its own funds, and so what does the bank do? The bank provides them a loan. Okay. The loan, what did we just learn? Loan is usually made up of created dollars and they charge interest on that loan. Okay. Now, the developing country, they have got to pay that back. Okay. Whether the dollars were made up or not, whether they're created or not, they have to pay back that loan, okay? And especially if they want new loans going forward, which they will because they are a developing country with no money, they are poor, okay? Then they have to pay that back, right? So the bank makes money off of developing countries, okay? They make money off of developing countries more so than helping them, okay? And it's the same with just how they deal with you and I, okay? For us to be in debt is for them to be successful. That's the way our banking system works. In fact, it's called a fractional reserve banking system. Okay, it's called a fractional reserve banking system. So again, what's going on? The banks are in the business of making money. Okay. They are in, people will say, well, the banking system works. No, for who? For who does it work? It works only for the banks. It does not work for you and I, right? It does not work for you and I. So that's what we call this fractional reserve system that we are on. Okay. And think about it. We have the Federal Reserve, right? We have the Federal Reserve, and the Federal Reserve is the place where they make money, right? They control what goes on interest rates and all that type of stuff, right? And it's so interesting that it's called the Federal Reserve because then it gives you, it misleads you in thinking that it's part of the government. So there are a lot of people, as was I, before I understood about how money and how it works. There are a lot of people that believe that the government is the one who actually makes up money, right? The government is the one who actually creates it all. And this is not true in its entirety. Okay. So, first of all, the Federal Reserve is not government. Okay. The Federal Reserve is owned by private people, families. Okay. And so when you think about it with the government being, when it says the government is in debt, we're in debt to the US that is trillions of dollars and all that. Who are they in debt with, right? If the government themselves could create money um, on a whim, why is it that our government is trillions of dollars in debt? Why is that, right? Our government does not create all of that money. That's being created by the Federal Reserve, which is not a government entity. They want you to believe it is, but it is a group of private families that control, you know, the creation of money and also control the banks, okay, and the banking system and all of that. They control all of that. Okay. So when you understand, how the fractional reserve system truly works, then you understand, these banks cannot truly be for me. These banks are only in the business of making money and staying in business. And the only way that they can do that is by us taking out debt, us taking out loans, us taking out credit cards, all of those things, right? So I want to talk now about not just loans, but also overdraft fees and NSF fees, maintenance fees, all kinds of fees, right? Another way that the bank is makes a lot of money is through all of these fees. Okay, so I'm looking down. I am pulling up my notes because I just want to make sure that I mention everything that I wanted to mention to you all about um, about the banks. So you're listening. Let me just take a pause there while we're going to move into the next topic of fees. You're listening to Radio Wave. This is Dividing Truth with Lexi Johnson. Actually, you're listening to Dividing Truth with Lexi Johnson, hosted by Radio Wave. I'm going to get my words right today, right? And so thank you for listening. Share this out with other people. Each and every week, I come to you and I'm sharing with you financial truths that are going to help you learn how money works, going to help you to learn how to master your money, how to play this money game. Because the worst thing, right, is to play a game when you don't know the rules, right? And so many of us, whether we like it or not, many of us are playing this money game and we have no idea how it works. So we're losing, right? So I want you to share with everyone that they can come and listen to this podcast every week. You can do that by going to the RadioWaveForYou.com website. Or if you subscribe to Dividing Truth, you can actually, if you miss the show live on Radio Wave or on any of the podcast streaming platforms, if you miss the show live, and you are a subscriber, you can get the show directly in your email, right? So just go to bit.ly/subscribe Dividing Truth. That will subscribe you to my show, to Radio Wave at large. And then you can definitely be sure that you're not going to miss an episode because it's going to come right to you in your email. Okay. So now let's talk about these fees. Okay, another way that banks make fees is, make money is through all of these fees that they charge. And oftentimes we'll go open a bank account and we will have no clue, no idea how much they're charging, right? We don't have an idea of all of the different fees that they can charge us for. And we don't take time to go through all of that. Because when you go to a bank, you open an account, you leave out of there with a folder full of papers, right? And we don't really take the time to go through those papers to understand all of the ins and outs of how that account works, right? We have the basic, things in mind. If they charge, a fee, a monthly fee to maintain the account, they'll let you that or let you know that. Or that some banks are like, if you go below a certain amount, some accounts, or if you go below a certain amount, then you're charged a fee. They'll let you know things like that, right? But they don't go into all of the details about all the fees that can be charged. But it is in the paperwork that we don't read, right? So what are some of these fees that banks can charge? Well, there is the non-sufficient funds fee. There are monthly maintenance fees. There are the ATM fees. There are the overdraft fees and others, right? There are others. So fees, how much did banks make in fees? Listen, in 2017, okay, in 2017, banks made, I'm looking at my notes because I wanted to make sure to get this right. 2017, banks made in fees alone $11.45 billion in fees. Okay. And let me clarify that. That was in NSF fees alone. Okay. $11.45 billion in NSF fees. It made 34.3 billion in overdraft fees. Okay, so that's NSF fees, that's overdraft fees. So we haven't talked about maintenance fees, we haven't talked about ATM fees, we haven't talked about any of that. So the banks are making a killing, okay? They are making a killing in fees, right? So the other thing is, if why if this is the one that always got me, okay? Particularly as it relates to your NSF fees or your overdraft fees, right? Some banks charge you that fee, which today is from $30 to $35, okay? NSF fee or an overdraft fee. $30 to $35, more so an NSF fee. Then there are banks that will, on top of that fee, for every day your account is in the negative, they will charge you a daily fee. Okay, $7, $9, $10, whatever it is. And the crazy thing is, if I didn't have the money to pay the original transaction that came through, and I don't have the money to give you the NSF fee, that $30 to $35, now you're charging me a daily fee on top of that. Craziness, right? How is that an example of a bank that is looking out for you? How is that an example of a bank that cares about its community or cares about its people? It's not, right? They are only in business to make money for themselves. So they charge you the overdraft fee or the NSF fee, right? Then they have the extended fees, those daily fees, right? Now, the other thing on top of that, if that's not bad enough, let me tell you what many banks are doing. They have what they call a high to low transaction process. What does that mean? Okay. So let's say that today you spent $5 at Smoothie King. I don't know, it must be a really small smoothie for $5, right? You spent $5 there. You went to the grocery store and you spent $30 there. Then you went to the beauty supply store and you spent $25 there, right? And then you went to the gas station, spent another $25 there. And then you also wrote a check you needed to pay your rent, right? And so you paid $1,000. Okay, pay your rent today, $1,000. You wrote a check, okay, for all of these, or doesn't even matter really whether it's a check or whatever. So what the bank does is they don't process in the order that you did these things, right? Because the first thing you did was the $5 smoothie. Well, that many banks don't process in the order that you did things. Many banks, what they will do is take the highest transaction and process it first. So even though the last transaction you made was the $1,000 transaction, okay, to pay your rent, your mortgage, or whatever, that's the one that they're going to process first. So they'll process the $1,000. They'll process, I believe we had a $35, then the 25, the 25, and then the $5. Now, what does that do? Okay, what does that do? You may be thinking, oh, I've had all of the money to cover the first four transactions, okay, Smoothie King, the beauty supply, the gas station, the grocery store. You had all of, and maybe part of the rent, and you realize, oh, I didn't have it. Now I need to go and make a deposit tomorrow, make sure whatever that runs. Well, the bank is already they way ahead of you, and they're processing it differently than you think. Okay, so what they do is they take that transaction for the rent, they run it through first because it's the highest, and then they move accordingly. So now what happens? Well, now you didn't have the money for anything. Okay, you don't have the money for anything, and so you get slapped with NSF fees for each transaction. For each transaction. Now tell me, Is that a bank that's looking out for you? No, it's not, because if they were doing right, they would process it in the order in which you made the purchases, right? That's what they would do. And so that's not what's happening. And so a lot of people are being hit with these overdraft fees, and they're not understanding, because in their math and in the way that they did things, they were like, but I had money for this, this, and that. How is it that now I owe all of this money? Well, that's what they did. They took the high transaction, they processed those first, and then they process, the smallest ones last. So they go from high to low, right? They go from high to low. All right. So that's how they work with those overdraft fees. Okay. And again, if you don't know this, then your whole, your monies could be messed up, right? And in a big way, messed up, because most people, again, are living paycheck to paycheck, right? Every 8 out of 10 people who are working full time say they're living paycheck to paycheck. Okay. So, you have no room. You have no room at all to, no room at all for any kind of NSF fees or overdraft fees or fees, period, right? You have no kind of room for that. All right. So you must be aware of that in these bank practices. Now, there's one more aspect of the bank that I want to talk about, which is investing, right? Because people are so afraid of investing, okay, with an investment company, investing in the stock market. And so they feel like investing through the bank would be a better choice. It would be safer to do that, right? Here's my little co-host. Say hello to everyone.
Hi.
All right. Say bye-bye.
Bye.
So you would think that, so most people think that investing with the bank is safer, right? So before we get into that, I want to remind you that you're listening to Dividing Truth with Lexi, and this is Radio Wave, and you can listen to this podcast in a number of different ways, right? You can go to radiowaveforyou.com and subscribe and listen to the podcast that way. You can go to any of your podcast streaming platforms, almost any of them, and search Radio Wave, and you will find the podcast. You can also subscribe to um, Dividing Truth, okay? And that website is going along the bottom, and what that does is it subscribes you directly to my podcast, but also subscribes you to Radio Wave, and it will subscribe you to both of those things at once, right? And this way, if you miss the live podcast, it'll come directly to your email inbox. It'll come directly to your email inbox. So go and subscribe. We have great weekly podcasts, not just here on Dividing Truth, but there are so many other radio shows and podcasts that you can listen to through Radio Wave as well, for your education, as folks would say, or your entertainment, right? All right, so let's talk about this last portion of the truth about your bank, okay? The truth about your bank. And this last portion has to do with investing. Someone asked me, I was doing a speaking for a conference, a virtual conference, just the other day. And someone asked me, is it best to invest through the bank? Is it best to invest through the bank? And so my short answer to that is no. Okay, my short answer to that is no. The long answer to that is there are a few reasons why I would not advise investing through the bank. Okay, so number one, banks will, try to sell you whatever products and stuff they have, because again, they're in the business to do what? They're in the business of making money and staying in business. And how do they do that? By taking advantage of you and I, right? And so they will say to you, okay, well, you don't want to, don't go invest. If you don't know anything about investing, they will truly take advantage of you. oh, don't go invest in the market or anything like that. You can invest right here in a CD. It is safe. Okay. And yeah, the CD may be safe, but you're also not going to get any kind of growth on your money, right? So if you're looking to get growth, major growth, that's not going to be the place. But because you don't understand anything about rate of return, because you don't understand the rule of 72, so Google that if you don't know what that is. Because you don't understand these things, they can really just get over, right? So a CD only gives you 1.5%, maybe, maybe 2%, right? And if you know the rule of 72, you understand that 1%, 2%, 3%, that's trash in terms of rate of return. Okay. So, but because banks know you don't know anything about that, and they also play on your emotions, knowing that you want to keep money safe, right? You don't like when you hear on the news, oh my gosh, the stock market crashed, you don't like to hear, oh, the stock market went down. You don't, because you don't understand the market, you think that's such a horrible thing, the way that they're talking about it, right? And so for you, you say, okay, yeah, then my money's safe in the bank. But what they don't tell you is that your investments are not safe. Like they're not FDIC insured. Okay. So investments are investments. There is risk. You can gain, you can lose. Okay. If you lose, there's nothing the bank can do about it. They're not, there's no FDIC back up there. Okay. Second, you can, there are banks that do have, and not all banks have these, but there are banks that do have an investment arm. And they do investments, but they give you very limited options, right? They give you very limited options. So they will only promote, whatever limited funds that they have and nothing else. And you better believe that those are funds that are going to work in their interest, okay, and not necessarily yours. So they may have your funds deposited in something. They take your money, they go and invest it directly with the investment company, okay? And they're investing in the company as the bank, and they will make returns, okay? I don't know, 10%, 11, 12, 13, 14%, whatever, however the market is doing. And then they'll turn around and give you the measly little percentage that they told you that you would get 3%, 4%, 6%. But that's about it, right? They're making huge returns, turning around and giving you a little bit out of those returns. Okay, so the bank is functioning as what we call a middleman, right? And so what do we know is about middlemen? Well, middlemen, they want their cut, right? And if middlemen can get a bigger cut, they will get a bigger cut. They will get the biggest cut that you will allow them to have, or the law will allow them to have, because unfortunately, how the banks are operating, everything that I've shared with you in this podcast so far is legal. Okay. It's legal. Okay. Then it's not right, but it's legal. And so this is why it's important for you to understand how these things work. Okay. So whether this is your personal finances or your business finances, you need to understand how the bank operates. Okay. How it operates when you come to make deposits, how it operates, as far as these fees are concerned, how it operates when you're working as an individual, if you want to invest, as your business, whatever the case may be, you have to understand how these banks operate, right? So they have a limited number of funds that they're going to share with you. And they're going to make the bigger cut, believe me, and you'll get whatever, smaller return. And you're going to be good with that because you don't know anything about investing. You don't know anything about the rule of 72. You don't know anything about that, right? And so, again, the investments then are not covered by the FDIC. Only thing covered by the FDIC is like what you put in your checking, your savings account, your money market accounts, I believe, and possibly the CDs are covered. Okay. But other than that, um, They are not covering anything else that you do. If you have an investment account with the bank, it is not covered by the FDIC. Okay. And they put that again in that writing, in that fine print, um, that their FDIC insurance does not extend to like stocks, bond, mutual funds, trusts, all of those things. Okay. So that is problematic because most people think, just it's the bank. And so therefore they have that coverage, the FDIC insurance coverage. And that's not the truth. Okay. That is not the truth. So hopefully today you have learned, and this is just kind of the tip of the iceberg, really, as it relates to banks. You can do more of your own research, but this is just the tip of the iceberg when we're talking about the truth as it relates to your banks, right? So again, what is my recommendation to you? What is my admonition to you? My recommendation to you is that the bank is not the place where you choose to do your long-term um, wealth creation. Okay. You're going to do that directly with investment companies. Okay. Even your emergency fund, because you're say, well, what about my emergency savings? Can I leave that there? I wouldn't even leave my emergency savings there. In fact, I don't. Okay. My emergency savings are in utility bonds and municipal bonds. That's what my emergency savings are in. I don't even leave that to the bank. Now, do you have to have some funds in the bank? Yes, because we have things that we have to do and get done daily on a daily basis, and that requires money. I'm not a person who carries cash on me, right? And so therefore, yes, there is some amount of money that you're going to leave that you have, access to from day to day to take care of whatever things that you need to take care of on a day-to-day basis. But anything other than that, my emergency savings, any short-term savings, I'm saving to, I don't know, this is not my case, but maybe your case, maybe you're saving for home, in a couple of years or 5 years or anything like that. So a short-term savings, maybe you're saving for a big vacation. I don't know. Not doing that at a bank. And then definitely not retirement savings or any kind of wealth building, wealth creation type of investing saving, not at the bank. Okay. So hopefully this episode has been helpful for you. We'll be back next week with another amazing episode of Dividing Truth. I want to thank you for listening today. Make sure you share with people to come and check out this episode, right? So that they can be informed. Okay. They can be informed and become masters in the money game. You can have dominion over your money, right? Think differently, master your money. That's what Dividing Truth with Lexi is all about. Thank you again for listening today, and we'll talk to you next week. Have a good one. Yeah, you can come on.